Hello, my friends traders. This is Caroline Alizane, graduate student of the Grok Trade Mentoring Program. It is Wednesday, April 20th of 2011, and we're looking at the Q's daily chart. And check this out. What a beautiful hammer confirmation we had here yesterday. Remember, as we talked about that hammer formation at the bottom of the down leg right here, and we talked about it here on Monday. And what we were looking for a breakout through the high of Monday, which was at the 56.27 mark, and a close above it to confirm that bullish formation on our chart. And there we go. We got that pretty confirmation here on Tuesday, and look what happened here today. Boom, we had that huge run up. We had a breakout through all major areas of resistance on our way up. And we got to that W high right here. That's the middle part of the W, which we talked about here again on Monday. We had that down leg right here, that run up here to resistance, and then a pull back down, forming that second leg up of that low W. And in terms for the W to be confirmed, we need to break through the high of April 1st, which was at the 57.90. That's why I have this little gray trend line in here on my chart, which is a significant area of resistance. So what we did here today, we went a little bit above it. We made that high of 57.94. So we went and broke through it, but we closed below it at the 57.88 mark. So we're still below the 57.90 mark. So pay close attention to it tomorrow. And check this out. What else do you see here on this chart? Doesn't it look like a hanging man to you? This little candlestick? Yeah, it looks like a hanging man to me. It looks like this is a hanging man candlestick formation right here on our chart. So pay close attention to it, because it's more bearish than bullish. So pay close attention to it tomorrow. And what we need to also pay close attention to again is that high of April 1st, which was at the 57.90 mark, as well as the high of today, which is at the 57.94 mark. So pay close attention to it to see if we get enough strength and power to bust through both of them, through the 57.90 mark and the 57.94 mark. And then if we could close above it, if we do that, then this hanging man is not valid anymore. It's not going to be valid anymore. And we're going to continue to the upside. We can get all the way up to that next area of resistance on our way up here at about 58.30. And then once this resistance is broken and it becomes support, so we would head to the other side of that little trend line, so it would be acting as a support, and then we could head all the way back up to the high of February 16th, which was at the 59.04. So we could go back there. So things can happen, but watch the highs here, the 57.90 again and the 57.94. So put that little trend line right here so you can better see it tomorrow. And the other thing here would be that we could form a high base. So we could rest a little bit here after that huge day on Wall Street today. We could rest a little bit here at the high, preparing for a big run one way or the other. So that's another scenario here for you to watch. Or we could get this huge gap down, breaking through the low of today, which was at the 56.10 mark. And then if we broke through that one and we closed below it, we could head back to that lower area of support right here, the about 55.83 mark. And then if we broke through that one, we could get all the way down to that next area of support, which is here in black, and it's at the 55 at around 55.18. So pay close attention to those. And then if we did break through the low of today, then we would also break through the two major moving averages, and that would put us back into a bearish territory. So watch that very closely tomorrow. And check this out. Look at the MACD. It's rising a little tiny bit in here. It's rising off of the zero line, but it's still kind of flat. So pay close attention to that as well and watch it really closely to look for confirmation. And again, finally, we are getting that spike in volume, which is confirming that up run. So we're slightly above the average, which is good. That's a good sign. So pay attention to the volume bars as well to look for a better confirmation. All right, so have a wonderful day, and I'll talk to you again tomorrow.